Well, hello, everybody. Again, welcome back to Radio Entrepreneurs. My name is Jeffrey Davis. I'm been the host of Radio Entrepreneurs, also chairman of the board of Mage LLC. Oh, that's the wrong way. Mage LLC, management consulting firm serving corporate clients since 1985, leadership development, coaching, organizational change. Our next guest, Sharon Winsmith, founder and CEO of Winsmith Tax. Great. We're going to talk about the new Biden tax laws. I'm all pumped, Sharon.
Yes, there's a lot of changes coming.
Well, why don't you let us in? Because there's a lot of entrepreneurs who would love to know what they're in for.
Yeah, definitely. So I'll talk a little bit about kind of what might impact a lot of your listeners, focusing on entrepreneurs and business owners. So we know there's a number of changes that Biden wants to make to the Trump tax cuts that happened a few years ago. Now, I do think coronavirus has slowed down a little bit Biden's focus on that. So I'll talk a little bit about what changes he's proposed and what we think might be likely to pass and when we think we can see those changes. So
Sounds good.
I think the first one that I think is relatively easy is we know rates are going up. So the corporate rate right now, it's down to 21%, which is a very low rate when you look at kind of globally other countries. But Biden actually wants to increase that to 28%. So that rate increase might make us rethink the use of corporations and structures. So that's definitely something to monitor and watch closely. We also expect to see the individual tax rate go back up to the pre-Trump rates of 39.6%. So currently it's 37%. I do expect pretty quickly, I think if not this year, next year, that we will see that individual rate get raised back up another 2.5 percentage points. So that's something for any high income earners you want to make sure that you watch and take a look at, because I think the rate increases are probably the easier passes that Biden could do to get those through Congress pretty quickly. The other thing that is very, very important for entrepreneurs and business owners is currently after the Trump tax cuts, there was this 20% deduction for business owners or entrepreneurs that are operating through what we call pass-through entities. So if you have an S Corp or a partnership structure, or even a single member LLC that you have not elected to treat as a C corporation, you currently enjoy a 20% deduction on income that you receive from your business. And the purpose of that was really to kind of put pass-through entities on par with C corporations by giving them that deduction. But what Biden wants to do is actually eliminate or phase out that 20% deduction for anyone making over $400,000. So if you are a high income earner and your business is very profitable, you do need to monitor that, because if that does go through, we might want to reassess the structure and it might make sense to put a corporation in there. So that's a big one that I could see coming, in the next few years. Another thing to watch if you are also a high income earner is payroll tax increases. So we all know, we pay attention to the check we write to the federal government and the state government every year for federal and state taxes, but there's all these other taxes that we pay that we don't even know we're paying. And payroll tax is a really big one, especially for business owners. It will be, one of your largest expenses, if not structured properly. And currently you pay Social Security tax of 12.4% on the first $142,000 that you earn. But that stops at 142, so you're not paying that 12.5% on income above that. But Biden actually wants to phase in the payroll tax for income above 400,000. So if you're making over 400,000, you're going to start paying that 12.4% on the amount that's above 400,000. So that can really add up as far as your payroll tax cost if that does go through for anyone who's a high earner. The other thing I'll mention is for anyone who invests in real estate, which I always, encourage people to have, so even if it's passive investments in real estate, because real estate is the most tax preferred investment class. We are expecting to see a lot of changes that are coming probably in the next few years that could really have a drastic impact on the real estate market. So one of the things is currently you get the benefit of bonus depreciation, so you can claim depreciation costs more quickly than you typically would be allowed to. And those are really significant advantages that Biden has talked about potentially repealing, and something that we're watching and that we could see go through. The other thing is for kind of savvy real estate investors. A mechanism that is used quite frequently is the 1031 like-kind exchange. And that allows you to kind of defer capital gains tax when you go to sell your property, provided that you reinvest into a new property that's of equal or higher value. So the 1031 deferral mechanism is used by real estate investors quite frequently. And so to the extent that that was repealed, which is something that is being considered and has been considered, by past administrations, I think that could have a devastating impact on the real estate market. I think that's something Biden will probably have a harder time getting past because, commercial real estate is just a disaster right now.
I hear about 1031s all the time.
Yes, and I would expect to see that one be a little bit more difficult because of the state of the real estate market for the commercial real estate. And that would just have detrimental impacts on an already down market. So that's just one to watch as well. And then the last thing I'll mention is for high net worth individuals, the estate tax, we're expecting massive changes to that. So, after Trump, the estate tax exclusion was raised to 11.8 million. So if you had a married couple, between the two of them, you're basically, as long as you don't have assets above about 23 million, you weren't subject to estate tax. But Biden wants to reduce those exclusions to, we've heard 5.8 million. So that will start to cover a lot of people who would otherwise not have had an estate tax problem. And there's also been discussions of Biden talking about lowering to even 3.5 million. So when you talk about people who have assets of 3.5 million versus, 11 or even higher for married couples, that could really catch a lot of people that otherwise did not think they had an estate tax problem. So if you're an individual that has, a net worth of, I would say 8 to 9 million or higher, you need to really be talking to your tax professionals and see if there's some planning that you should be doing now, take advantage of the higher exclusion amounts, rather than waiting to when we know these amounts are going to go down and you're going to have a big estate tax problem. So the other thing I'll just mention on estate tax is currently there's this benefit of step up in basis. So if I own stock that's highly appreciated and then I die and pass that to my heirs, they get to step up their basis in the stock to what the fair market value is on that date. And so basically the tax on the appreciation during my life just escapes taxation because of the step up in basis. But we are hearing Biden, talk about potentially eliminating that benefit. And that would also have drastic impacts on, there's a lot of liquidity issues that come with that, and would also really impact the way we kind of think about estate tax planning going forward. So that's another thing I would just keep an eye on and make sure you're staying kind of close to your tax professionals on that and talking to them about what changes you should have, to your structure to take into account these changes that we're expecting to provide.
Well, there's a lot going on. I know we're spending a lot of money. Our debt is going up, and I think that they're trying to figure out a way to keep that debt from going up with all the expenditures that we're making, despite any politics on either side. And it sounds like what they're trying to do is they're trying to, play a little bit of Robin Hood here and take a little bit more from the rich. Clearly, there's going to be a lot of changes, and entrepreneurs are going to have to deal with that and look at how they're dealing with this. I find your comments to be very helpful, Sharon. If someone wanted to learn more about you and your practice at Sharon at Winsmith, Winsmith Tax, how would they find you?
Yes, you can go to our website at winsmithtax.com and schedule a free consultation with me directly, or you can also just email me at sharon@winsmithtax.com.
That's pretty easy. And I hope you come back again. These are great topics, and you've brought us a lot of things to think about. So we appreciate talking to you.
Thanks for having me on, Jeffrey. Appreciate it.
Great. Remind everybody, this is Radio Entrepreneurs.